This is Nightly Business Report with Bill Griffith and Sue Herrera.
Bounce back. Stocks rise to start the week, but there are a few key things that will drive the market through the rest of the year end.
The road ahead. General Motors is closing plants and laying off thousands in cities where the automaker has deep roots as it looks to a very different future.
Every dollar counts. There's a new front in the battle among the retailers, and at the center of it all is your smartphone. Those stories and more tonight on Nightly Business Report for Monday, November 26th.
And we do bid you a good evening, everybody, and welcome. Not bad for a Monday. Stocks rose sharply at the opening bell this morning and never looked back. Tech led the way, so did retailers on what is arguably one of the most important days of the year for that sector. It was all a very much needed pause from the recent turbulence that has caused the major indexes to move in and out of correction territory recently. Today, the Dow advanced 354 points to 24,640, snapping its latest four-day losing streak. The Nasdaq was up 142. The S&P added 40 points today. Why the rebound and why today? Bob Pisani has some answers for us tonight.
The market's put in a much-needed rally, and for several good reasons. The S&P was more than 10% off its recent highs, but the damage was much worse in many sectors like oil services, semiconductors, banks, and retailers. The bottom line is a lot of sectors are discounting a lot of bad news, and since no one is expecting an imminent recession, it's not unreasonable to see some kind of bounce. Beyond that, though, traders are pinning their hopes for a continued rally on two potentially market-moving events. First, Fed Chair Jay Powell is speaking at the New York Economic Club on Wednesday afternoon. Many are hopeful that with the recent decline in the markets in oil, as well as turmoil surrounding China tariffs and slower global growth issues, they're hoping that Powell may sound a little less aggressive and a little more dovish about the prospects for rate hikes in 2019. Now, that may be a lot of wishful thinking, frankly. The Fed chairman is not going to front-run the FOMC meeting in early December by suddenly changing his position. Now, he may touch on a slower global economy and a slower housing market, maybe, but the message is unlikely to signal a possible cooling in the Fed's desire to continue to lift rates. Finally, there's this meeting between President Trump and Chinese President Xi Jinping in Buenos Aires later this week. Traders are hopeful that just an announcement of a ceasefire, just a vague statement that no new incremental tariffs will be implemented in the first part of 2019 while they continue to negotiate, that may be enough to lift the markets further. Here's the bottom line. Given how oversold the markets are, the barrier to a modest rally this week, it's not very high. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
But traders may not be so hopeful after a late report today from the Wall Street Journal that President Trump still expects to move ahead with an increase on tariffs on Chinese goods. That increase is set to go into effect in January. The president also spoke about the possibility of tariffs on Apple products, and that sent that stock lower in initial after-hours trading tonight.
Trade is just one of the things that could drive the market between now and year's end. That's according to our next guest. Joining us is Lamar Villery, portfolio manager at Villery & Company. Lamar, welcome back. Good to see you again.
Thank you. Good to be back.
We've mentioned a little bit about trade, especially with the president's comments of late this afternoon. You're also watching central bank activity as we go into the end of the year. Why?
I think that's going to be something on the top of investors' minds is what's going to happen at the central bank. I think the consensus is that the rates are going to move upward. We tend to agree with that, but as Bob mentioned earlier, any change to that could really move the market.
And what about trade? Bob also mentioned that, the president is saying that he's still thinking he's going to impose these 25% tariffs on those Chinese goods come January 1st. If that doesn't happen, Bob says Wall Street will view that as a victory. Do you see rallies then? Is that what's going to happen here, do you think?
Yeah, if there's any temperance in the posture toward the trade war, I think you would see a nice move upward. Unfortunately, we sort of expected that before the midterms. We didn't see it, so it seems as though Trump now may be pushing it out to be a presidential election issue, so he maybe has a little more time.
You also are noting consumer data. What type of data, and why do you think that's going to be important?
Sure. You guys referenced earlier some of the data we saw in, 20+% increases in Black Friday sales, as well as people thinking you're going to see as much or even more increases here on Cyber Monday. Unfortunately, what we like to look at is company earnings. There aren't any earnings. Earnings season is pretty much over. So the only thing we can look at is some of these metrics as they come out that give us an idea of how the consumer is doing. So far, what we've seen has been positive, and I think that's a big part of why you saw the big move up today.
So Fed rate increase, that's already in the market. Tariffs, that's already in the market. What could happen that the market's not anticipating right now that you're thinking about?
Continued strength in the consumer. I think the nice thing is almost counterintuitively, where the expectation is that interest rates are going to go up. That's bad. The expectation is that the trade war is going to continue and even exacerbate. That's bad. So if the expectation is for something bad, anything in the opposite direction is viewed as a positive. So I think right now investors are pretty spooked or pretty resigned, I guess, to bad news. And that's what we like to see, because that gives you more opportunity to be surprisingly moves in the upside.
Lamar, thank you. Lamar Villery with Villery and Company.
Big changes are coming to General Motors. The automaker today said that it plans to cut about 15,000 jobs in North America as it shutters a handful of factories and discontinues a number of its models. Wall Street clearly liked what it heard, though. The stock was up as much as 7.5% today. It closed up 4.5%. Phil LeBeau reports now on the idea behind the strategy and why GM is ending production in cities it has called home for decades.
It's the news they've been fearing for months in Lordstown, Ohio. The local GM plant will effectively shut down early next year.
I felt like somebody kicked me in the stomach. I've been, working here for a long time.
It's equally painful at GM's Oshawa plant just outside Toronto.
Nobody will tell us anything, and that's why we're leaving. There's people in there bawling their eyes out. I've never seen anything like it, and we can't get any answers, so we've stopped the line and we're leaving.
Heart's pumping out of my chest right now, but I've been here 13 years, so you got to take a stand at some point. So that's what we're doing.
The 3 GM plants in Lordstown, Ohio, Detroit, Michigan, and Oshawa, Ontario, each employ between 1,300 and 2,200 people. Those workers have been building models like the Chevy Cruze and Impala, as well as the Buick LaCrosse, sedans that have seen sales slide as Americans buy more crossovers and pickup trucks, a trend that troubles the mayor of Lordstown.
There just isn't a market for it. If you look across the board at Ford, Chrysler, General Motors, people just aren't buying the cars.
GM CEO Mary Barra says the cuts will keep her company lean and agile. It will also help the company's bottom line. But it doesn't sit well with President Trump, who has repeatedly promised to protect and add manufacturing jobs in states like Ohio.
I was very tough. I spoke with her when I heard they were closing. And I said, this country's done a lot for General Motors. You better get back in there soon. That's Ohio. And you better get back in there soon.
For now, GM says it has no plans to add new models to the plants it is shuttering, leaving Northeast Ohio and Southeast Michigan wondering how they'll replace thousands of high-paying manufacturing jobs. This is the largest restructuring at General Motors since it went bankrupt almost a decade ago in the midst of a major recession. This time around, the cuts come as the company is near record profits and the economy is running strong. Phil LeBeau, Nightly Business Report, Chicago.
It's being reported that GM CEO Mary Barra had a meeting at the White House this afternoon with the president's National Economic Council director, Larry Kudlow, to discuss the company's announcement.
Well, GM's announcement highlights a dramatic transformation underway in the automotive industry. So what does the automaker of the future look like? Joining us tonight is Carl Brower. He's executive publisher and analyst at Kelley Blue Book. Good to see you again. Welcome back.
Hey, great to be on with you.
This isn't so much a downsizing it as is a shift in strategy. I mean, Mary Barra was quick to point out that they aren't just laying people off. They're still hiring, but they're looking for people with different skills. They're looking for a very different kind of automaker in the future, aren't they?
They really are. And I think if you wanted to describe this shift as one of a move more toward a Silicon Valley type of mindset and business model, I think that's an accurate way to perceive it. And I think they're going to be looking for a lot of those similar skill sets that you see with a high value in Silicon Valley.
In other words, centered around technology. Because the cars of today are more sophisticated than ever before. In my case, they're more sophisticated than I am. So they're looking at a big technological shift.
Yeah, that's exactly right. They're looking to, make the company, future-proofed and prepared for all these massive changes that we see coming. There's just no getting away from the shift that's going to happen in the auto industry over the next really 5 to 10 years, more change than we've seen in the past 100. And I think Mary Barra's got a great handle on that and is trying to prepare the company for it.
So it's more electric cars, it's more hybrids, it's autonomous cars that they're all working on. Does it mean a smaller company? I mean, politicians are going to be very unhappy to hear that they're going to have to make do with fewer workers. Is that what we're looking at here as well?
It might end up being a total smaller workforce. It might be. But I don't think it's substantially different. I don't think the size is the shift as much as what you've already talked about. It's the nature of the business and the nature of the human resources that drive that business. I think that's a much bigger shift. The size may or may not shift, but probably shouldn't be ultimately that much smaller.
It's going to be interesting to watch this happen. Carl Brower from Kelley Blue Book. Again, thanks for joining us tonight.
Thank you.
Carlos Ghosn is out as chairman of Mitsubishi. This comes 1 week after he was arrested in Tokyo for alleged financial misconduct and just days after he was stripped of his chairmanship at Nissan. Ghosn has not been charged with any crime, but is being questioned by Japanese regulators who say he underreported his income over several years.
Investors were also watching the situation at the U.S.-Mexico border, where violent clashes took place over the weekend. Today, President Trump pushed Congress to fund his proposed border wall. In a tweet, he threatened to close that border permanently. He had previously vowed to veto any spending bill if it did not include border wall funding. Lawmakers now return to work this week. They have 11 days to pass spending bills and avoid a partial government shutdown.
Time to take a look at some of today's upgrades and downgrades. Novartis was upgraded to outperform from market perform at Cowen. The analyst calls the stock his best idea for 2019, citing new drugs in the company's management. The price target is $100. The stock was up 1% to 89 even. Fellow drug maker Eli Lilly was downgraded to neutral from buy over at Citi. The analyst cites the stock's valuation after a big run-up this year. The price target is $115. The shares fell a fraction to $112.38.
Still ahead, breaking records.
Cyber Monday at an East Coast fulfillment center for Amazon. And the real question here, can Amazon break its own Cyber Monday record? I'm Contessa Brewer in Robbinsville, New Jersey. That story coming up on Nightly Business Report.
A case involving Apple made its way to the Supreme Court today. At issue is the 30% commission that Apple takes on its App Store sales. The iPhone users in the class action suit claim that it is akin to monopolistic price gouging because when fees are raised, they are passed on to consumers, and those consumers can only buy apps through Apple's App Store. A ruling is expected in June.
Move over Black Friday. Cyber Monday is expected to be big. So big that online sales today, by some estimates, are on track to break records. It's no secret that Amazon is a dominant force in e-commerce, but now it's also facing a lot more competition. Contessa Brewer is at a fulfillment center in Robbinsville, New Jersey today.
This is one of 110 busy fulfillment centers for Amazon across the United States and one of about 25 robotic centers globally. The online retail giant is trying to get customers to shop more, to spend more, and to return more often.
I'm a big Amazon shopper.
I do most of my shopping on Amazon.
Amazon's pulling out all the stops, trying to break its own Cyber Monday record. Last year's was the company's biggest day ever. selling about 3.5 million items per hour.
We expect this year will be even bigger. We're offering bigger selection, bigger discounts than ever before. We're offering free shipping, not just for our Prime members.
Deloitte forecasts as much as a 22% jump in overall e-commerce sales this year. Black Friday, famous for its bricks and mortar deals, broke online shopping records, up nearly 24% over last year, according to Adobe.
Cyber Monday is becoming so much more important because, online sales are up high 20s. So that's where the growth is. That's where the business is to be won.
Amazon's fending off competitors like Walmart, Target, and Best Buy, intent on stealing market share. With more people shopping online, big retailers are generally offering free shipping, but most with strings attached. Amazon's free-for-all approach will come with a cost. Last quarter, even before the holiday shipping deal, Amazon said it spent $6.6 billion on shipping, nearly double its operating income. But clearly, something about its strategy is working.
I'm buying things that I never bought before.
Amazon's own tech toys are among the biggest sellers today. No surprise, they're deeply discounted. An Echo Dot costs less than half its original price. Fire sticks, tablets on sale, attention-getting sales on toys too. But not everyone's convinced.
I like to go into the stores and look and feel and buy the clothes that way.
For the converts, the convenience is the key. And Amazon thinks it can offer increasing convenience and grow its profit margin by owning more of the distribution chain, buying cargo planes and trucks, hiring its own delivery teams. Today, as the orders come flying in for robots and humans alike, it's just another manic Cyber Monday. In Robbinsville, New Jersey, Contessa Brewer, Nightly Business Report.
And as we reported, it was just days ago that Amazon was hit with a major data breach, which caused customer names and email addresses to be disclosed on its website. Amazon says the issue has been fixed, and it informed customers who may have been impacted.
Well, not only are sales moving online, they're moving to your smartphone as well. Adobe reported this morning that on Black Friday alone, $2 billion in sales were made on smartphones. Is this the next front that retailers need to focus on? Joining us tonight, Connie Guglielmo. She's the editor-in-chief of CNET. Welcome back, Connie.
Hi.
I mean, people have been using their smartphones to shop for a long time, but this is really becoming a big deal now, starting this year, right?
It's definitely becoming a big deal. A lot more people have smartphones. I mean, most people in the United States, if they have a phone, have a smartphone. That doesn't even include tablets. There's a lot of couch surfing that's going on. And I was watching the news. It was kind of cold on the East Coast. California was lovely, but I heard that it was pretty cold. And so I imagine a lot of people wanted to get the best deal they could. And if they could do it from their phone, why not? Yep. Why leave the house?
It's also faster in many cases, is it not? Just the search function and the ability to get those email pushes or text pushes, it makes it much more compelling than it used to be.
Absolutely. One of the advantages that Amazon has had for a long time is that one-click shopping, right? You set up your account, you order what you want, and you buy it with a click. Now that we have mobile payment systems like Apple Pay and PayPal, you can do that one-click shopping experience at a lot of retailers. It's definitely getting easier to find things, as you mentioned. Email alerts send you the deals that you want. You just click on it and you buy. And Cyber Monday is becoming a big deal because a lot of us are back at work and we're using the Wi-Fi networks at work, which are super fast. So it's very convenient, no waiting. And there's that old line about instant gratification. The problem with it is it takes too long. If you're on a super fast network, things seem a lot smoother.
So it's not enough for a retailer now to have a website. You've got to have a mobile app as well, and the technology to handle mobile technology. Who are the winners in this category right now? Who's doing the best job, do you think?
Well, we can look at who is gaining new app downloads, and there have been a couple of reports out just over the past few days. As you would expect, places like Amazon, Walmart, Best Buy, there's a lot of interest in electronics and toys and games, and those retailers sell those devices, and they're very well-known brands. They have very well-designed apps that make it very easy to find their products. We're seeing a lot more retailers. I was really interested to see that GOAT, which is an online marketplace for sneakers, was one of the most downloaded apps over this weekend. So people are finding the brands that matter to them, the categories of goods that they care about. And even though we call it holiday shopping, I would venture to guess a lot of this shopping was personal.
Right.
People were just looking for good deals.
The old self-gifters going on there. Connie, always good to see you. Connie Guglielmo from CNET joining us tonight.
My pleasure.
Campbell's Soup reaches a truce with an activist investor, and that's where we begin tonight's Market Focus. After months of public fighting, Dan Loeb's Third Point will add 2 nominees to Campbell's board. As part of the deal, Campbell will expand the size of the board, and Third Point will have input on Campbell's CEO search. Third Point had initially pushed for an outright sale of the company. Campbell's Soup shares fell more than 3% to $39.02. Newell Brands named a new chief financial officer as part of a move to help remake the struggling company. Newell has repeatedly missed sales targets following its 2016 acquisition of Jarden. The company also has plans to sell 8 businesses to help pay down debt. Investors cheered that move, sending the shares of Newell Brands up 8% to $23.52.
Casino companies Eldorado Resorts and the Stars Group have now entered into an online betting agreement. The deal allows the Stars Group to own and operate online games in the 13 states in which Eldorado currently operates. Shares of Eldorado Resorts popped nearly 10% on that news to $39.38. And CVS and Aetna have received the final state approval that they need to complete their roughly $69 billion merger. New York's Department of Financial Services today gave the okay to that acquisition. The deal could close now as soon as this Wednesday. CVS shares rose another 3.5% to $77.84. Aetna shares climbed 2% to $210.10.
Coming up, the way we watch sports may be about to change, but only if the companies can get it right. AT&T, Comcast, Charter Communications, and Dish Network are among the cable and satellite providers giving refunds to those who paid $19.99 to watch Friday's golf match between Tiger Woods and Phil Mickelson. The much-hyped game was marred by glitches during AT&T's live stream. AT&T had hoped to use the webcast to showcase its reach following the Time Warner acquisition. Julia Borston is covering the story for us from LA. So, Julia, what does this ultimately mean for AT&T?
Well, it's certainly not good for AT&T, Sue, especially because AT&T spent months promoting this, and AT&T CEO Randall Stephenson said this would be a key way to illustrate the strength of their acquisition of Time Warner, which is now called Warner Media, and would illustrate the benefits of having all of these assets under one roof. The likes of sports content like this highly anticipated match, and also the ability to go direct to consumer. So AT&T missed this opportunity to show that value, and they could be up millions of dollars. It was not only a $9 million purse, but it cost certainly millions of dollars to produce and distribute this kind of match.
Okay, you had a glitch this time, but what about the future? Isn't this an opportunity for media companies, not just AT&T, but those others that were participating, to use an event like this, a pay-per-view event, to find a new revenue stream on various platforms?
It's very important for them to figure out how to successfully distribute pay-per-view events like this, because so many consumers are now cutting the cord and watching content through streaming services. So if you want to be able to make a lot of money off of an event like this, being able to go direct to consumer will be key. But this is not the first time there have been failures with events like this. So they really have to make sure to get this right the next time around.
Julia, thank you as always. Julia Borston in Los Angeles.
Finally tonight, space exploration just took another step forward. NASA's InSight spacecraft successfully landed on Mars today. After nearly 7 months of traveling, it marks the 8th time that NASA has successfully landed a robot on the red planet, but this is the United States' first attempt since 2012. Over the next 2 years now, InSight will drill deep into the Mars interior to collect data. The mission carries an $850 million price tag.
Wow. Favorite story of the day.
Yep.
That does it for us tonight. I'm Sue Herrera. Thanks for joining us. We want to remind you that this is the time of year your public television station seeks your support.
I'm Bill Griffith. We do thank you very much for that support. Have a great evening, everybody. We'll see you tomorrow.